Hello investors, welcome back to your number one place for all your investing needs. So as we're going through one of the most anticipating earnings seasons in a long time, we're going to take a look at the top 5 stocks to buy in the second week of August. Now these are stocks that either had earnings or are having earnings coming up soon, and I see a very good buying opportunity on them with some potential coming up in the near future. Before we get into the top 5 stocks, go ahead and smash that like button. Can we get over 200 likes on this video? Let's aim for 200 likes. Also guys, if you like this type of content or any of the other content that I make, go ahead and press that subscribe button and turn on that bell notification so you get notified every time I make a new video. I make videos on the top 5 stocks, penny stocks, blue chip stocks. I make videos on dividend investing and all types of other investing ideas. So if you guys like that, go ahead and subscribe. Thank you guys. We just hit 9,000 subscribers last week. So thank you guys so much for that. And let's get that 10K before the end of the year. Now let's get into the list. Okay, so our number 5 pick for the second week of August is going to be Berkshire Hathaway. So you guys all know that Warren Buffett, owns this company obviously, and they're doing really good. So they were trading down here at around $160 per share when the Rona started and we had the market crash. Obviously, it's been trending up ever since then, and as we can see, something happened here. So around this area here, in July, it went from about $180, currently at almost $210 per share. And now, what is the reasoning behind that? What do you guys think? So if you guys know anything about Berkshire Hathaway, you know that they own a bunch of companies, they have stakes in different companies. So here are the holdings as of March 31st, 2020, as reported in the Berkshire Hathaway's 13F filing on May 15, 2020. So here we go. So we can see right here all the stocks that they own and how many shares they own and how much money is invested. And the big one we want to talk about is Apple. So you guys all know that Apple is doing amazing right now on earnings. Apple was trading at around what, $450 per share, I believe. Let's take a quick look right here. Apple. Apple was trading at around $370. Currently, it's $444. It was over $450 actually the other day. So it's ran up about $70, $80. And what we can see here is the end of July, Apple started to rocket up. Now, what is the same thing that Berkshire Hathaway is doing? Right here, end of July, the stocks start trending up. The reasoning behind that is, obviously, Berkshire Hathaway owns all of these companies, and these are the amounts of shares and how much money they have invested in them. And one of their biggest holdings is actually Apple. I mean, look at how many shares they own right here. That is a lot of shares, and their value is just tremendous when you look at it right there. And that is something that we have to look at. I mean, even Amazon, they own a lot of Amazon. It's not as much as the Apple, but they still own a lot of it. And actually, another thing is they just bought a bunch of more Bank of America. They just threw a bunch more money in the past week into Bank of America. And those are some things that we definitely want to keep an eye out on with Berkshire Hathaway, because they own all these amazing companies. And I believe that this is one of the best stocks to own long term, because you own a piece of everything else that is good. Now, this one does not have a dividend at all, but their market cap is $509 billion. If we take a quick look here at their earnings, they missed earnings in May, so May 2nd, they missed their earnings by a little bit, or actually by a lot, almost $2 billion they missed by. But they have earnings coming out soon in the next couple of weeks, actually, the earnings should be, which is good. And their revenue is actually they're estimated to be $53.6 billion. So we're going to see if they beat earnings or not. But as we know, Apple did amazing with their earnings, so that could definitely push Berkshire Hathaway, as long as their other companies that they own did well, as well. So that's something we have to keep an eye out on. But Berkshire Hathaway, we still have a long way, to reach back up here to where we were at around $230 per share and continue to trend on up. But in the long run, I believe this company is going to be, hitting $300 sometimes in 2021 and even higher as we continue to trend up. Coming in at number 4, we have ticker symbol BABA, also known as Alibaba. So this company, some of you guys might know it, some of you might not, but it's a technology company. So they specialize in e-commerce, retail, internet, and technology. One of the best companies, actually, one of the best Chinese companies that I know of. But they're doing really well. And the only reason they dropped about 5% on Friday before the close is because Trump is having all these sanctions and the tension is not that good with China right now. And that is why it dropped about $13.50. But before that, the stock was doing really good. If you look at the 1 month chart, I mean, it was down here 241. It went up to a high of about $265, $266 per share. But it's still doing good. The stock is, almost at all-time highs currently. Even when the Rona started up here, it was trading at 176 and it's been trending up. So it's almost up about $70, $80 since then. Another thing with this stock is they have earnings coming up, and I believe that they're going to have some decent earnings, actually, in my opinion, obviously. They don't have a dividend, so they have no dividend right there. Their market cap is $681.85 billion. If we take a look right here for the earnings that we just talked about, So the earnings that they had on May 22nd, 2020, the EPS actual was $1.29 per share. EPS surprise was beat by 43 cents. Revenue actual 16.03 billion. They beat by 754.43 million. So they beat almost by $1 billion almost in earnings last quarter. So you can only imagine how much this quarter is gonna be, because everybody was doing everything online, and that's something that definitely made this company give it some positivity. So their announcement date is on August 20th, 2020, pre-market. Their EPS estimate is $1.95 per share. They're expected to have revenue of about 21.16 billion, so that's about 5 billion higher than the previous quarter that we had. But obviously that's something we have to know, because as we saw other tech companies like Microsoft and even like Apple and other companies, they've done really amazing in the last few months. And that is something that we're also expecting from Alibaba to do as well, especially since everybody's doing everything from home. And that means that companies like this are going to thrive from it and do very well. As long as we're in this situation that we are right now, it's going to continue to trend up. So this stock is definitely one to keep an eye out on. I think we could definitely hit $300 per share by the end of this year. So we still have another $48-50 to go, by the end of the year, which is a nice gain in my opinion. I mean, that'll be around almost 20%, 15-20% gain in the next couple of months. So definitely one to keep an eye out on. That is our number 4 pick. All right, now before we get into this third pick, go ahead and smash that like button if you haven't already. Let's try to get over 200 likes on this video. But anyways, number 3 pick for the second week of August is going to be the Home Depot. So HD, ticker symbol HD, currently trading at around $271.64, up about 0.84% on Friday before the close. So this stock was trading down here at a low of about $160, $150 per share when the Rona started, and the company's been thriving and going up. Now, we've talked about this one in the past, but how can we not talk about it as it's doing so good? I mean, look at here. If we look at the 6-month chart, the stock is just trending up. It's been trending up for the longest time, and right now it's having this little breakout. I mean, look, a month ago it was at 247, and now we're all the way up here. We were at a high of about 273, 274. But the company is doing good, and the reason behind that is everybody is at home. People are going to Home Depot and buying products to renovate their homes. Getting paint. Some people are bored inside and they want to paint their walls, so they're getting random colors: blue, white, red, whatever color they want to paint it. They can do whatever they want because we're in quarantine. So what else are they going to do except do that? Some people are buying obviously things for the outside of their house, outside of their yard. Just doing some type of renovation. Maybe they want to put a new fence in or something like that. But these are definitely the reasons why Home Depot, and another actually stock that you guys might want to check out is actually Lowe's. So the Lowe's company, they are also thriving right now in this situation, because these companies are really doing positive in situations like this, because people are going out buying these things because they have nothing else to do. Now, the good thing with the Home Depot is they have earnings coming up actually in about a week or two, and we're going to talk about that in a little bit. But right now, their dividend rate right here is $6 per share. Their yield is 2.21%. And their market cap is 292.16 billion. So they have a really nice market cap. They're doing really well. So they pay out about $1.50 per quarter. And if we take a look right here, their 4-year average yield is 2.21%. So not a bad dividend at all. The average dividend. Years of growth. So for the past 11 years, this company has been growing higher and higher. And like we said, about $5.44 per share. Their dividend history, obviously, it's been amazing. Quarterly paying dividend, they pay about $1.50 per quarter. Their dividend safety right here, about payout ratio is 58.47%. It was here in the 40s, now it's in about the 50s, but still not bad. And now if we take a look at their earnings, they had earnings on May 19, 2020. EPS actual was $2.08 per share, missed by 18 cents per share. Revenue was 28.26 billion, beat by 685.97 million, so almost over $500 million right there in profit. Their next earnings are coming up actually in August. I don't know why right here it says 11/17/2020. Their earnings actually are in August, which I'm really certain of actually. Yeah, I just had to double check because that was wrong. Yeah, earnings are definitely in August. Like I said, August 18, 2020. I don't know why they have that right here, but we're expecting them to have some decent earnings actually. I believe that they're going to definitely blow it again and have a really good earnings, really good revenue. So that is another reason why we have Home Depot on our watch list. I believe that Home Depot can definitely get to $300 per share by the end of August maybe. That's my prediction right now. I mean, that's not that's about a 10% gain in the next month, I believe. With some good earnings, I believe that we can definitely do it, and that's why Home Depot is on my list. I actually own some Home Depot, and I'm actually playing some options just to keep everything transparent with you guys. I do have some options that I own right now in Home Depot, so I'm expecting some good earnings. And also, like I said, you guys might want to check out Lowe's, because Lowe's is going to be doing amazing just like Home Depot. All right, coming in at number 2, we have NKE, which is Nike. So you might ask, why do I have Nike on this list? But Nike was trading down here, obviously, at around $60 per share when the Rona crash happened, and the stocks went up, up to about 101, almost $102 per share, up about 1.4% as of the close. But this stock has been trading sideways here for about 2 months now. So for 2 months, maybe 3 months, the stock has been just doing, as they say right now, the kangaroo market. So they've just been going up, down, up, down, up, down, not really moving up or down, a lot, just a few percent up, a few percent down. And that is something we're definitely watching. So if we can have a breakout, as we can see, we could potentially have one right here into the earnings. But if we can get a breakout, this stock could definitely get into all-time highs, and that's what we're hoping for, actually. So if we can break through $106 per share, we're going to those all-time highs for now, and that's the potential we see right there. As we can see, we're almost at those all-time highs, and I believe with earnings we could do it. And the reason behind that is, everybody had that first stimulus check, and what did people do? People aren't investors like me and you, so they might have just went out online, went on Nike and bought some new shoes, threw that money away, bought some new sneakers, things like that. So people are spending money. They have nothing else to do. Some people are on unemployment, so they're getting all this money, more money that they might have made while they were working. And what they're going to do with this extra money, they're going to go out and spend it, and they're going to buy Nike shoes. And that is why we have Nike on here, because I believe that Nike will thrive from this as well. Even though I believe they they lost a lot of money actually in the previous quarter, but that doesn't mean that once everything opens back up, everything starts to do good, Nike is going to also trend up and do good. But they do have a dividend, and it's about 98 cents per share. Their yield is less than 1%. Market cap 158.89 billion. If we take a quick look right here for their dividend, about 24 cents per share, which is super low, but hey, at least they have a dividend. Some stocks don't even have a dividend at all. If we look right here for their dividend yield, 4-year average yield is about 1%, so it's about 1%, not too bad. Now, they've had growth for 18 years, so that is one thing to see. For 18 years, they've been growing their dividend. Now it's about 90 cents per share. Their dividend history right here, pays a quarterly dividend about 24 cents. And then their dividend safety payout ratio is about 41%. It was down here in the low 30s. If we take a look right here at their earnings, actually, as we can see, in June 25th, they missed earnings, so it was about negative 51 cents per share, missed by 55 cents. The revenue was 6.31 billion. They missed by almost $1 billion. So obviously, yeah, they did lose a lot of money, but I believe once the things start to open back up, this stock will start to trend back up, as people are going to be throwing more money into it, and that's something that we're going to be looking for. So they have earnings again on September 25th, 2020, and their EPS estimate is 43 cents per share, 8.91 billion, which is about 2 billion more than the previous quarter, a little bit more than that. So that is why we think that Nike could do well. We just need everything to start back up, open back up, and we have high potential for this one to have a breakout. So let's see if this one can go through those all-time highs. So this one obviously is just one to speculate. It's not a guarantee, obviously, just something to keep an eye out on and see what happens. All right, and now we're at the number 1 pick for the second week of August, and the ticker symbol is ATVI, which is Activision Blizzard. A lot of you gamers might know this one. If you do, go ahead and leave a comment below. Are you invested in it, actually? So this stock is doing great. So in the past year, it's been up about 71.46%, but this stock has been benefiting since the beginning. So right here, when we had the crash, it was trading at about $52. It's went up about $30 since then, trading at $82.47 currently. It was down about 5% on Friday, but we'll get into that and the reasoning behind that, actually. It was a very hot stock in the past few weeks because earnings were coming up, so it was running up to the earnings. Obviously, once earnings happened, a lot of people sold off, and that is why the stock trickled down. But this one has a dividend of about 41 cents per share, 0.5% dividend. Market cap 63.66 billion. If we take a look right here at their dividend real quick, it's nothing major, but 41 cents per share. If we take a quick look right here, dividend yield, like we said, 0.59% average yield for the past 4 years. Dividend growth for the past 10 years, they've had dividend growth, which is good. They're slowly trending up, 41 cents per share. Their dividend history, they pay out one time a year, 41 cents. And then their dividend safety is 12.83%, which is super low, and that's something we want to see because that means they don't have to take out a lot of their revenue to pay out the dividends. So their earnings were on August 4th, 2020. So 4 days ago, they had earnings. The EPS actual was 97 cents per share, which was a beat by 28 cents. That's amazing. Wow. Right? That's like 25% almost, right? Revenue actual was 2.08 billion, which was a beat by 379.83 million. That's almost $500 million right there. Beat, they destroyed the earnings, and I believe that the next earnings date by the end of the year is going to be even better earnings, than this one, and then the one after that next year in 2021 is going to be even better because winter is coming, which means gamers are going to be inside and more people are going to be playing, and Christmas and all these other things that are going to be benefiting, with this company. So this company it has nowhere to go except up. So I believe that this stock by the end of the year could be trading at over $100 per share. I mean, that's just my opinion right there, but I think we could definitely hit $100 per share. And we did have a little bit of a sell-off, obviously, right there. The stock has to cool down. It can't go up forever, but I believe we're going to, trickle down a little bit, consolidate, and then continue that trend back up, and we're going to aim for that $100 per share for sure. But, gaming companies are doing amazing right now. EA, obviously, doing amazing. Penn Gaming, I believe, they're also doing really good. They just had earnings. They blew it through the roof. These companies are benefiting right now. This is probably one of their best times that they've had in a very, very long time. All right, guys, so those are the top 5 stocks for the second week of August. I hope you guys have really enjoyed those. We had some amazing picks right there. Some of them already had earnings. Some of them are coming up with earnings soon. And we have very, very huge potential. Now, obviously, if you guys are following the market right now, NASDAQ and S&P 500 are doing really, really good. S&P 500 is almost at the all-time highs. NASDAQ is already there. Every week we're hitting all-time highs with it. Before the Rona happened, it was here under 10,000. Now it's around 11,000 points. Friday we had a little bit of obviously of a down day, but this stock is just doing amazing. I mean, the whole sector is doing amazing is what I mean, and the NASDAQ is doing really well, and the whole market in general. A lot of the tech stocks are really benefiting right now with this whole situation that is going on. Go ahead and smash that like button, guys. Let's try to get over 200 likes on this video. Subscribe to the channel for more content like this. Leave a comment below letting me know if you guys are playing any of these stocks in the earnings, or if you guys played any of them, and if you own any of these stocks in your portfolios. And as always, guys, I'm not a financial advisor, so obviously these are all my opinions, like I say in the beginning of my videos where I put the disclaimer. Do your own diligence and do your own research before investing into any stocks. Don't trade stocks based off anybody else's opinion. If you don't know what you're doing, go ahead and do some research. You can find things on the internet or talk to a financial advisor. So I hope you guys enjoyed this, and I hope to see you guys next time. Goodbye.